Hello everybody, hope you're all doing great. This is your tax consultant Nandakumar KV at Aotax.com. Today we are going to learn what to review in your free tax return draft. Foremost, congratulations on receiving your free tax return draft from Aotax. Now, we have divided this presentation into three parts because in US you may have an obligation to file your federal tax return, your state tax return, and your city or county tax return. Of course, most of the county taxes form part of the state tax return itself, but these three are usually filed by any individual in US: a federal tax return, a state tax return, and a local tax return, be it a city tax return. Now, let's foremost understand how to review your federal tax return, that is Form 1040 or 1040 NR. The first one, if you are a US citizen or a resident alien for tax purposes, you must be filing a Form 1040 US Individual Income Tax Return. And if you are not a US citizen or a resident alien for tax purposes, you must be filing a Form 1040 NR US Non-Resident Income Tax Return. Now, you will be filing a Form 1040 usually when you are treated as a citizen or resident of United States. Now, any individual who has a green card or who is a citizen of US is normally treated as US citizen, and any person who has been in US for at least 6 months or 183 days in a particular calendar year, that's the tax year, right from Jan 1st through December 31st, in that case he is also treated as a resident alien. Of course, there are other situations too wherein a person will be treated as resident. When you get your tax return, you have to make sure that you check the basic information: the first name, middle name, last name for yourself, your spouse, your kids, and your dependent, and ensure that it is as it is in your SSN or ITIN letter. Now, for those of you who do not have SSN, they need to apply for ITIN. If you can go to YouTube and type Aotax Help, you will find our channel here. On Aotax Help, you will see that we have also made video on ITIN, all about ITIN. This is a recent video that we have uploaded onto our portal. So if you have any questions concerning ITIN, I encourage that you please watch this video. Let me show how a tax return looks like, how a 1040 and a 1040 NR look like. This is how a 1040 will look like, which is filed by US citizens or residents for tax purposes. So it will read on top Form 1040, and this is how a non-resident tax return will look like, Form 1040 NR. Now, so what I said, step 1, please check the type of return that you're filing. Are you filing a 1040, which is applicable to a citizen or resident, or are you filing a 1040 NR applicable to a non-resident? Basic information, please check your first name, middle name, and last name, as in here. Make sure that they are right, and if you are having an SSN, make sure that they are in line with the name in the SSN card. Sometimes the first name, last name, they all appear in one line also, because of the different tax software that we use, but just make sure that your name is complete. Check the address that you give on the tax return, because this is where all the IRS or state communication will be sent to you. So make sure the address that you're giving here in the home address is the current address wherein you will receive all the communication from the IRS. You must be glad to know that one of the free value-added services provided by the Aotax is free managed hosting services. So in case you're leaving for India or your home country for good, and if you do not have any friends or relatives whose address you can share, you can please give our office address for free. And in case we receive any correspondence on your behalf from the IRS or state or local department, we will have that dispatched to you. Then 3 is the filing status. So when you look at the tax return, So we are going with the flow. First we look at the type of the return, then we look at the basic information, and then the filing status. You have different filing status, but the most commonly used ones are these: single or married filing jointly. So what it says is, if you are unmarried or legally divorced as on December 31st of that tax year, then you must select single. If you are married as on December 31st of that tax year, then you can select either married filing jointly or married filing separately. For most of the average taxpayers, filing jointly is usually beneficial than filing separately, unless both the spouses fall into very high income groups. And note, you can check only one filing status. You see that there are 5 different filing status here, but you can check only one box. Then, exemptions. So when you look at this, you will be entitled to $4,050 each towards every person that is there on the tax return. Now, when you look at a tax return, let's say here you have a taxpayer, you have a spouse, and there are 2 kids, a son and a daughter. So there are 4 people on this tax return, and this taxpayer would be eligible for an exemption of 4,050 times the number on line 60. The box that you see here, it shows the number of people who are there on this particular tax return. So here you see yourself, your spouse, and 2 kids. So 4 people being there, you get 4 exemptions of $4,050 each, and you get $16,200 as exemptions. Then the next one, check the incomes. So from line number 7 through line number 21, you see different kinds of incomes, different types of incomes. So line number 7 talks about wage income. So see your Form W2, your wage statement issued by the employer. In case you don't have Form W2, you can ask for a substitute W2 to be prepared by your tax consultant. And in case there is some mismatch or some errors or some corrections on your W2, you can check with your HR or the compensation department, and they can always issue a corrected W2. And next one, line number 8, is your interest income. You have different types of interest here: taxable interest and tax exempt interest. So for that, please check the source document, Form 1099 INT. And to see the breakup of the total interest that is calculated here, you can check the worksheet on Schedule B. And line 9, dividend income, check the source document 1099 DIV and the worksheet Schedule B or D. And for line 10, state and local tax refunds. See, the refunds are also generally taxable. They are generally taxable. In case you claimed itemized deductions last year, the state and local refunds are taxable. So check the Form 1099G that you must have received from the state or local department, and make sure that that amount is reflected here on line number 10. In case you claimed standard deduction last year, then your state refunds are not taxable. Then alimony received, in case if there's any, enter it on line number 11. Then line number 12, business income. In case you received a Form 1099 miscellaneous as a contractor or something, you can enter that in the business income section. And the detailed calculation of how your profit has been arrived at, that you can see on Schedule C or CEC. Then the other incomes that you can see there are capital gains. For that, please check your broker statement, that is Form 1099B, and the worksheet Schedule D. And the capital gains are usually of 2 types, long-term and short-term. 1 year or more, it's long-term, and below 1 year, it is short-term. And then you have your IRA distributions, pensions, and annuities, line 15 and 16, see Form 1099R. Line 17, rents and royalties, Form 1099 miscellaneous. In case you have incomes from pass-through entities like partnership, S corporations, and trust, make sure you get Schedule K1 from the pass-through entity and you report that income here. And line number 19, you see unemployment compensation. In case you received any unemployment compensation, please check the source document Form 1099G. And line number 20, in case you received any social security benefits, please enter that amount on line number 20, and you can always see the source document form SSA 1099. And last but not the least, line number 21, if you have any other income, please enter it there. And for that, the source document could be form 1099 miscellaneous. So line number 7 through 21 indicate your total income that you've earned in that particular tax year, right from Jan 1st through December 31st. Moving on to the next piece is adjustments. The adjustments. The educator expenses, if you or your spouse were a teacher or professor, then health savings account, in case you have contributed for a self-coverage or for a family coverage with any bank or financial institution wherein you are saving for your health, that health savings account contribution can also be claimed as a deduction. This is different from the health insurance premium. I'm sure most of you know about it. And then line number 26 is your moving expenses. In case you moved from one location to another location for work purposes and the distance between the location is at least 50 miles, then you are eligible for certain moving expenses. That comes on form 3903. And then if you are a self-employed individual, or if you are somebody who is paying taxes as a business person, then you get a deduction for the self-employment taxes too. For that, please check the Schedule SE, which has a detailed worksheet of how this deduction has been calculated. And then moving on to line number 30, penalty on early withdrawal of savings. Line 31 is alimony paid. Line 32 is your investment into IRA. Normally, Roth IRA is for wealth investment purposes, but traditional IRA is for tax deduction purposes. So in case you have invested into traditional IRA, you and your spouse can claim each $5,500 each. So check with your financial institution, and if you probably want to invest into IRA, you can always invest anytime before April 15th of 2018, which is applicable even for the tax year 2017 tax return. And then student loan interest deduction on line number 33, and tuition fees, if any. And the total of all these adjustments, line number 23 to line number 35, comes on line number 36. So this is your total adjustments that you can deduct. And line number 37 is nothing but line number 22 minus line number 36. And line number 37 is your adjusted gross income. And line number 38 is also the same, adjusted gross income. Moving on to page 2 of Form 1040, line number 40. If you look at line number 40 carefully, you see that you can claim either itemized deductions or standard deduction. Now when you look at the standard deduction, you see that there's a box flowing through on the left side. So standard deduction is a fixed amount of deduction that is allowed on the basis of filing status as on December 31st of that particular tax year. Now if you are a single or married filing separately, you get 6,300 standard. If you choose married filing jointly or qualifying widower, you get 12,600. If you choose head of household, you get 9,300. Now, in our case, we choose married filing jointly. So this means that this person is eligible for a standard deduction of $12,600. But because his itemized deductions are greater than the standard deduction of $12,600, the tax consultant has chosen to claim itemized deduction rather than standard deduction because it is more beneficial to the client. And itemized deductions are actual expenses incurred by the taxpayer or spouse on medical expenses, taxes, mortgage interest payments, charitable contributions, casualties, theft losses, unreimbursed job expenses, etc. And the best of standard or itemized deduction is usually claimed on line number 40 of Form 1040. And if you are claiming itemized deductions, please see the breakup of that on Schedule A. And the Schedule A looks something like this. So it gives you detail of the medical and dental expenses that you have incurred. And remember that even medical and dental expenses, you can claim it only in excess of 7.5% of your AGI. And then taxes you paid, the state and local income taxes, general sales tax, real estate taxes, personal property taxes, then the interest, home mortgage interest paid outside the US, then mortgage insurance premium, your charitable contribution whether in cash or in kind, then any losses, then any unreimbursed job expenses that you might have incurred on conveyance, meals, rent, your regular business expenses which are not reimbursed by the employer and you have incurred it on a temporary assignment. All those come on line number 21. Then the tax preparation fees. Then there's a ceiling limit on this. Anything above 2% of your AGI only claimed as job expenses, unreimbursed job expenses, then other miscellaneous deductions if any. Then the total is your itemized deductions. And here if you look at Form 2106 Easy, this is how a Form 2106 Easy looks like, and it reads unreimbursed employee business expenses. So you can claim only expenses which are ordinary and necessary for your businesses or your profession or job, and you have not been reimbursed by your employer for any of these expenses. So when you look at this form, you have two parts here, part 1 and part 2. The part 2 talks about the vehicle that you have used for your business purpose. It asks the date you placed your vehicle in service, so probably the date you first purchased, so this could also be in 15 or 14 also, 2015 or 2014. Then it asks the total number of miles you drove during the current tax year, and business miles 5,000, commuting and other, and you can claim only the business miles. And was your vehicle available for personal use during off-duty hours? Yes. If you or your spouse have another vehicle, please check yes or no. And do you have evidence to support your deduction? Yes. Okay, let me take you to the part 1 now. It says complete part 2, so we just learnt about part 2, and now let's figure part 1. So it says multiply line 8A by 54 cents, and we see that line 8A, business miles that he used for business purposes, is 5,000. So 5,000 times 0.54, it's $2,700. And some parking fees, tolls, transportation is 1,000, travel expenses some 2,500, business expenses some 1,000, and meals and entertainment expenses some 1,800, and the total comes to 9,000. So here it says enter here and on Schedule A, Form 1040, line number 21. And we see that this 9,000 is getting carried to Schedule A, line number 21, 9,000. And the total of all these far right outer columns is what is 14,161, which is being, and if you see here also it says enter this amount on Form 1040, line number 40. So we take this 14,161 and we enter it in line number 40 of 1040 as 14,161. So all said and done, on line 40 you can claim either itemized deduction or standard deduction, whichever is beneficial to you. And then you got to check for the tax credits that you may be eligible for. Line number 48 through 55 talks of different tax credits that you might be eligible for. So if you are somebody paying taxes on the same income both in US and in India, you will be eligible for foreign tax credit. I would encourage you to please watch our video on YouTube. So if you are somebody paying taxes both in US and in India on the same income, you may be eligible for foreign tax credit. I would encourage you to watch our video on YouTube at Aotax Help channel. I would encourage you to please subscribe to it, and please watch our video on foreign tax credit. This is the video. You can watch this video on foreign tax credit, and I'm sure that you will get to know a lot of information about foreign tax credit through this video. And credit for child and dependent care expenses. Normally, if both taxpayer and spouse are in employment and they put their kid in a daycare center or something, they can claim a credit for the expenses that they incurred on the daycare. So that credit comes on line number 49. And then education credits. In case you're pursuing any education in US from a recognized university or an education institution, then you are eligible for lifetime learning credit or American Opportunity Tax credit. The credit comes on line number 50. Then line number 51, it talks about retirement savings contribution credit. In case you're saving for your retirement, be it 401k or any other retirement plan, though your income is small, you would be eligible for retirement savings contribution credit. And then line number 52, the darling credit of all the parent taxpayers. So for every kid, you get $1,000 child tax credit, and the age of the qualifying child must be below 17 years of age, and it is normally limited in case your income is very high. And line number 53 talks about residential energy credits. That is in case you purchase any energy saving equipment for your house, you get residential energy credit. And then line 67 and 68 is just additional child tax credit and another education credit, that is American Opportunity credit. So just make note of these tax credits. Also check if you missed claiming any of this on the tax return drafts. Line 57 is self-employment tax that you would be paying in case you are in business or you have a 1099 miscellaneous wherein you are reporting some business income, and additional tax on IRAs. If any you did a premature withdrawal or an early withdrawal of IRA, you may be levied with additional tax. And in case you have an household employee, you may have to pay household employment taxes on line number 60. And healthcare penalty you may have to pay if you or your spouse or your dependents don't have minimum essential health coverage for that particular tax year. That's on line number 61. And then moving on to payments. Line number 64, the federal income tax withheld from forms W2 and 1099. So if you look at your form W2, you will see that the employer has very diligently withdrawn your federal taxes, state taxes and local taxes every month. But here 1040 is your federal tax return. So you just look at box number 2 of your form W2 and you will see that there has been federal income tax withheld there. And also on other source documents also, 1099 INT, DIV, G or any other source document, you can always see the federal income tax withheld, and the sum of all those federal income tax withholds is what comes here on line number 64. Line number 70, amount paid with request for extension to file. You will be glad to know that one of the 10 free value-added services provided by Aotax also includes free extension filing service for its beloved clients. So for some reason, if you're not able to file your tax return on or before April 15th, you can always choose to file an extension using our free service, and this will give you additional 6 months time to file your tax return. However, please note that these additional 6 months are only to file your tax return but not to pay your taxes. In other words, if you owe any taxes, you got to pay whether it is to the federal or state or local authorities on or before April 15th. With that said, the total payments come on line number on 74, and here we see that the total payments on line 74 is 12,500. The total tax has been 8,402. If you see, this is the flow of the tax return. If you look at this tax return, this individual is filing a 1040. He is married with a wife and 2 kids. His income is 105450 and his adjustments are 5981. So this brings his adjusted gross income to 99,469. He is eligible for itemized deduction because if it is standard deduction, he'll get only 12,600, whereas itemized deduction is 14,161. We saw how this was calculated, and we also see that his exemptions, he is eligible for 4 exemptions. There are 4 people on the tax return, 4,050 into 4, 16,200. With this, his taxable income is 69,108 and his tax is 9,441. With that said, he also qualifies for child tax credit of 2,000 and he pays some self-employment tax of 961. With that, his total tax is 8,402. However, his federal tax withholdings have been 12,500, so he is eligible for a wonderful refund of $4,098. That's on line number 75. Now, if you have to receive your refund, you have to provide your bank details for direct deposit of refund. And when we say bank details, we need the following three. Routing number, it's usually 9-digit number, usually found on the bottom left of your check leaf, your account number, and then account type, checking or savings. Normally people give checking, but whatever is comfortable for you. And you must remember that refund processing time for e-filed returns are less than 21 days, and for manually filed returns are less than 6 weeks. And here you have to check for your bank details. Just make sure that everything is entered properly. And in case, let's assume that this taxpayer is in a due position, then you will see the amount that is due on line number 78 instead of refund. And even in that case, you have to give the bank details in case you wish to have the auto withdrawal of the tax due amount. And you can also check your federal refund status at irs.gov/refunds. You will get this screen, where's my refund? Click on this button, check my refund status, and you will have to keep these three things handy before you check your refund. Have your SSN or ITN, know your filing status, like single, married filing jointly or whatsoever, and know the exact refund amount that you are eligible for. And then go hit this check my refund status, and this screen will pop up. Just enter your amount and they'll let you know in how much time you will be receiving your refund. Then, as I said, in case you owe also, you need to give the bank details, and you must give a date when you want the funds to be withdrawn to our tax consultant. And in case you do not want to provide the bank details for auto withdrawal of taxes, you can also make the payment electronically using this website, EFTPS, Electronic Federal Tax Payment System. It's approved by the IRS and the federal government, so go ahead and make the payment there. And you can, in case your tax amount is very huge for you, you can also make the payment in installments. And for that, you can log on to IRS website, payments/online payment agreement application. But we normally don't recommend this. I would say that you better take a short-term loan and pay off the taxes, than going for an online payment arrangement. But if you're comfortable with the interest and other payment features, I would encourage that you go and have this online payment agreement done with the IRS. And last but not the least, signatures. You can have your signatures in case you are filing manually. In case you are filing for an ITIN application, you have to make sure that you and your spouse sign the tax return, and you mail the documents across to the IRS. But if you're filing the tax return electronically, then your filing confirmation through Form 8879 is more than enough. Okay, so just to summarize, this is how a federal tax return is reviewed. When you get your tax return, check the basic information, check the filing status, check the number of exemptions you are eligible for, make sure all your incomes have been considered, check for the adjustments you are eligible for, check whether they have claimed itemized deduction or standard deduction on your tax return, check the number of exemptions you are eligible for, see what's your taxable income, how much tax you are paying, what are the credits that you are eligible for, are there any other payments, extra taxes that you must be paying in, and what are your total withholdings, and the balance is your refund or due. And make sure you have your bank details given there, and in case you're filing your return manually, make sure that they are signed appropriately. That's it. So we have done with part 1 of federal tax return review. Now let's understand how to review a state tax return. Now, in case you resided in any of the following tax-free states, then there is no filing requirement to file state tax return in these 9 states. What are they? Florida, Alaska, South Dakota, Texas, Tennessee, Nevada, New Hampshire, Washington, and Wyoming. That's amazing, isn't it? The foremost thing that you must be checking on a state tax return is, are you considered a full year resident, are you considered a part year resident, or a non-resident? Normally, if you have stayed in that state for the most of the year, or for the complete part of the year, you're full year resident. And if you have stayed in that particular state for less than 2 months, or never in that state but you still got a W2 from that state for which you're filing taxes, then you got to select non-resident. And part year resident is, in case you have stayed in multiple states and you earn income or you resided there, then you are considered as part year resident. Number 2, basic information. Just like how I told you in the federal tax return, make sure that your first name, middle name, last name is exactly as in the SSN card of yourself, your spouse, your kids, or your dependents. And in case your dependents don't have an SSN but an ITIN, make sure the name is also as in an ITIN letter. And make sure that the address you give on the tax return is a US address, and because this is where all the IRS or the state communication will be sent. And as I said earlier, you can always avail our free managed hosting services, wherein you can give our address absolutely free. Then check for the filing status, check for the taxable income. Now, when you're working in different states, you got to check what is the income that is being taxed in that particular state. Some states calculate tax on federal adjusted gross income, few states calculate tax on federal taxable income, and few states consider only that particular state wage income. That's reported on Form W2 of Box 16. So each state has its own rules, while considering the taxable income. And tax credits. Many states give different types of credits, especially the rental credits. In case you are renting a house or paying taxes, you get the rental credit. You also get a credit for the real estate taxes paid, and you also get other state tax credit. In case you also get other state tax credit if an individual is a resident of one state and earns income from another state, then tax credit is allowed for the tax paid to that another state on income that is taxed by the resident state. So you worked in California, but you got W2 from New Jersey, let's say, and you are a full year resident of California, then you get other state tax credit from New Jersey because you already paid taxes there. Then check if there is a reciprocal agreement. Normally, NJ and PA is one classic example. They have reciprocal agreement. So in case a taxpayer is a resident of PA but got his W2 from NJ, then NJ will give him a full refund of the taxes because he never resided there, and in PA he has to pay the complete taxes. Whereas in other states, it is like the non-resident state will give the credit for the taxes paid to it in the resident state, like what I explained you earlier. And then check the payments, state income tax withheld, and in case you paid any amounts with request for extension, you can claim that, and what you get is refund again. And here also you will need to provide your bank details, and in case you owe also, you need to provide your bank details and mention the date on which you want these taxes to be withdrawn. And if you do not wish to provide your bank details for auto withdrawal of taxes, you can always visit the respective state tax revenue department official website to find the payment options, or you can pay online by your debit or credit card also, or send or mail a check or money order to the state department too. Now part 3, how to review your local, that is city or county tax return. In addition to federal and state income taxes, there are 5 states which normally impose city taxes: Michigan, New York, Ohio, Pennsylvania, and Kentucky. And when it comes to county taxes, these 3 states, they levy county taxes: Indiana, Iowa, and Maryland. And normally the county taxes are part of state tax return, but city tax returns you may have to file it separately. And when you review your city tax return also, check for the residential status, if you were a resident of that particular city. And here also, just like how we learnt in the state, you could be a full year resident, part year resident, or a non-resident. And then check for the basic information like your name, address, filing status, your taxable income, make sure that only the income that you earned in that particular city is being reflected there. Then type of filing, check whether it's a e-filing or whether it's a manual filing. If it's e-filing, it will be filed electronically. If it's a manual filing, then you will have to sign it and mail the documents to the department. And finally, check if you are also required to file FBAR or FATCA, that is Foreign Bank Accounting Report. In case you have more than $10,000 in the foreign country, you will be required to file FBAR, and in case you have more than $50,000 or $100,000 in the foreign country, you will be required to file FATCA Form 8938. And I encourage you to watch our video on FBAR on the YouTube. So if you come to our YouTube channel, Aotax Help, this is the video, FBAR and FATCA process. We had almost like 33,000 views here, so I would definitely encourage you to watch our video on FBAR and FATCA. I think we fairly covered how to review your free tax return draft. Congratulations once again on working with Aotax and getting your free tax return draft. And in case you still have any questions, please feel free to talk to our tax consultant, and they'll be more than happy to walk you through every line item on the tax return. Thank you very much. Congratulations once again, and all the very best, and wish you a very, very happy tax filing.